Here is the extensive, expert-level expansion of Section 19. I have maintained your exact headings but added specific transaction codes, T-codes, like VKOA, OVKK, FS00, table logic, and the troubleshooting steps that distinguish senior consultants from juniors. 19. Revenue and Reconciliation Account Determination. This section is where SAP SD becomes finance, up to the point of delivery. SD is operational, it's about logistics and promises. The moment the billing document is saved and passed to accounting, SD becomes financially accountable. Most critical production issues in SD are not "I can't create an order." They are greater than accounting document not generated, error in VF02, greater than revenue posted to the wrong G or L account, audit finding, greater than cost center missing infield status group, integration failure. A senior SD consultant is expected to own these issues end-to-end. You cannot simply say it's an FI issue when the root cause is a missing configuration in VKOA. Revenue Account Determination. Revenue Account Determination answers one critical question. Greater than which general ledger, G or L, account should this specific revenue line item go to? SAP does not hardcode revenue accounts. It derives them dynamically using the condition technique, the same logic used for pricing, output, and free goods. This flexibility allows a single billing document to post Product A revenue to account 400,000, Service B revenue to account 400,010, Freight surcharge to account 410,000, Tax to account 220,000, Check master data relevant for account assignment. Before touching configuration, SAP checks the master data. This is the input for the determination logic. 1. Customer master, billing view, field, account assignment group, KNVVKTGRD. Usage, classifies who bought the goods. Examples: O1, domestic revenue, O2, export revenue, O3, intercompany. 2. Material master, sales org 2 view, field, account assignment group, MVKEKTGRM. Usage, classifies what was sold. Examples: O1, trading goods, O2, finished goods, O3, services. 3. Sales organization. Linkage, the sales org is assigned to a company code. This tells the system which chart of accounts, INT, CAUS, etc. to use. If any of these are missing, greater than revenue account determination fails. Greater than the system tries to find a combination. Example: domestic plus finished goods, but finds blank plus finished goods, which doesn't exist in the rule table. Senior rule: greater than always check master data before touching VKOA. 90% of account determination errors are just a user forgetting to fill the account assignment group in the customer master. Define dependencies, condition tables. T-code, VR12. Dependencies, condition tables. Define which combination of fields the system uses to look up the G or L account. Common dependency dimensions, tables. Table 001, customer GRP or material GRP or account key. Most specific. Table 002, customer GRP or account key. Table 003, material GRP or account key. Table 004, general or account key. Fallback. More dimensions equals more precision. You can post sales of laptops to Germany differently from sales of laptops to France. Too many dimensions equals maintenance nightmare. If you make the table too complex, finance has to maintain thousands of entries. Senior insight. Greater than use the minimum dimensions needed to satisfy accounting rules. If finance doesn't need to report revenue by region, do not add region to the condition table. Define access sequences and account determination types. T-code, VR13, access equipom. VR14, types. Just like pricing, revenue account determination relies on the search strategy. 1. Account determination type, standard, KOFI, account determination. Standard, KOFK, account determination with controlling, assigns cost objects. 2. Access sequence, KOFI. Step 10. Check table 001, cust or mat or key. Found, stop. Step 20. Check table 002, cust or key. found. Stop. Step 30. Check table 003, mat or key. Found. Stop. This allows specificity. A specific customer gets special accounting. Generality. Everyone else falls back to the standard domestic sales account. But unlike pricing, greater than account determination must be stable and predictable. You don't want revenue jumping between accounts randomly. Define and assign account determination procedures. T-code, VOFA, assignment. The account determination procedure, example. Kofi 00 acts as the container for the condition types. Configuration, procedure, KOFI 00. Step 10, condition type Kofi. Step 20, condition type KOFK. Assignment, the procedure is assigned to the billing type, VOFA. Example, billing type F2. Procedure, KOFI 00. Example, billing type S1. Cancellation. Procedure, KOFI 00. Risk. Changing this post-go live is extremely risky. If you change the procedure, you might break the cancellation logic for old invoices. Define and assign account keys. T-code, OV34. The account key is the bridge between the pricing procedure and the G or L account. How it works? 1. In pricing, V or O8. The condition PR00, price, is assigned account key SERL. 2. In pricing, the condition MWST, tax, is assigned account key MWS. 3. In pricing, the condition KF00, freight, is assigned account key ERF. Standard account keys, ERL, sales revenue, ERS, sales deductions, discounts, MWS, output tax, ERF, freight revenue. Account key determines which G or L account is searched. ERL points to revenue, credit. ERS points to expense or contra revenue, debit. Wrong account key equals wrong financial statement. If you assign ERL to a discount condition, you will artificially inflate your top-line revenue instead of recording a deduction. Assign G or L accounts, VKOA, T-code, VKOA. This is the most famous transaction in SD-FI integration. This is the mapping table. Typical, VKOA, combination, app, V, sales. Con type, KOFI. CH, AC, INT, chart of accounts. S-org, 1000. AAG, cust. O1, domestic. AAG mat. O1, finished goods. ACTCI, ERL. G or L account, 400,000. Domestic sales. FG. Logic. SAP reads the invoice, finds it is domestic or finished goods or revenue, looks in VKOA, returns G or L 400,000. This mapping decides where money finally lands. Real revenue account scenarios. Scenario 1. Domestic sale. Inputs. Cust AAG equals O1. Domestic. MAT AAG equals O1. FG. Key equals ERL. Result. G or L 410,000. DOM. Sales. Tax. Key equals MWS. G or L 220,000. Output tax. Scenario 2. Export sale. Inputs. Cust AAG equals O2. Export. MAT AAG equals O1. FG. Key equals ERL. Result. G or L 420,000. Export sales. Tax. Key equals MWS. G or L 220,010. Export tax clearing. Usually 0%. Scenario 3. Scrap sale. Inputs. Cust AAG equals O1. MAT AAG equals O3. Scrap. Key equals ERL. Result. G or L 490,000. Other income or scrap. All driven by VKOA logic. The sales document type is usually irrelevant. The master data drives the accounting. Reconciliation account determination. T-code, OV64. Reconciliation accounts control where customer receivables, AR, are posted on the balance sheet. Normally, the reconciliation account is hard-coded in the customer master, company code view. Customer A, Recon ACCT 140,000, trade receivables. However, in advanced scenarios, you may need to override this dynamically using alternative reconciliation accounts. Reconciliation account determination based on condition technique. Why use this? You sell to a customer who is usually a trade customer, ACCT 140,000. But today, you are selling them a capital asset, an old machine. You want this receivable to go to asset sales receivables, ACCT 140,099. Not trade AR. Configuration. Uses condition type KOAB, reconciliation account. Uses the same table or access sequence logic as revenue. This allows legal separation of receivables, keeping rent receivables separate from product sales receivables for the same customer. Assign account determination procedure. T-code OV64. Assign the procedure, example, KOAB00, to the billing type. This triggers the system to look for an alternative AR account during billing, used mainly in complex FI environments, conglomerates, multi-business entities, leasing plus sales. Assign G or L accounts. These G or L accounts represent accounts receivable, AR, must align with FI subledger. The G or L must be defined as a reconciliation account type D, customer, in FS00. Balance sheet structure. These accounts define your current assets. Wrong reconciliation account causes greater than balance sheet mismatch. Greater than FI audit issues. Y is a trade receivable sitting in the intercompany account. Define alternative reconciliation accounts. T-code OBXY FI config. Even if SD determines a new GL, example, 140,099, FI must allow the swap. You must configure the alternative reconciliation account indicator in FI to permit swapping 140,000 for 140,099. Examples: export receivables, separate GL for hedging purposes. Employee receivables, separate GL for internal sales. Export data from VKOA into Excel sheet. This is a real-world survival skill. Why? VKOA is complex. You cannot see all 500 combinations in one screen easily. Auditors ask for mappings. Show me that all export sales go to the export GL. FI teams need clarity. They don't know SD. They just want a list. Senior consultants. 1. Go to VKOA. 2. Select the table, example, 001. 3. List all entries. 4. Export to Excel. 5. Pivot table check. Are there any material groups missing? Are any account keys mapped to the wrong GL? This prevents surprise posting errors in production. Cash account determination. Cash account determination applies to cash sales, BV or CS stock types, and immediate payment scenarios. The difference. Standard invoice. Debit customer, AR credit revenue. Cash invoice. Debit cash clearing account, credit revenue. The customer AR is cleared immediately. Cash account determination based on condition technique. Setup. Usually handled via specific billing types, BV. Often uses a specific account assignment group on the one-time customer master record. Sometimes uses a specific account key, EVV cash settlement in the pricing procedure. Used in retail, point-of-sale integration, walk-in sales, factory outlet shops. Assign account determination procedure. You typically define a separate account determination procedure for cash sales billing types to ensure they don't accidentally hit the standard trade AR accounts. Assign G or L accounts. Cash G or L accounts must be closely controlled. These are liquid assets. Reconciled daily, the G or L balance must match the physical cash in the drawer or the credit card settlement batch. Any error here shows immediately in greater than cash book discrepancies. Greater than bank reconciliation failures. Define alternative reconciliation accounts. Used when multiple cash locations. Store A needs to post to petty cash A, 100,001. Store B to petty cash B, 100,002. SD determines the G or L based on the sales office or plant in the determination logic. Common real project failures. 1. Billing document created but no FI document. Check VBRKRFBSK, posting status. Usually error C, account determination. 2. Revenue posted to wrong G or L, material A, service, was set up with material group O1, product, in master data. 3. Discounts posted as revenue. The account key ERS was mapped to a revenue GL instead of a contra revenue GL in VKOA4. Tax posted incorrectly. The tax code, SD, does not map to a valid tax account in FI, OB40. 5. Cost center missing. The revenue GL is set as a cost element, type 11, requiring a cost center or profit center. If SD doesn't pass it, via KOFK, the posting fails. Root cause almost always greater than misaligned master data, customer or material, plus VKOA configuration. How senior consultants debug account determination. When a billing document fails to post, 1. Go to T-code VF02. 2. Enter billing document number, hit enter. 3. Go to menu, environment greater than account. Determination analysis, greater than revenue accounts. 4. Expand the tree on the left. 5. Look for the error, SAP will tell you, access. Table 001 Tash, Cust GRP01 or MAT GRP01, or key ERL, G or L. Account not found. 6. This tells you exactly which combination is missing in VKOA. Never start debugging by guessing in VKOA. Use the analysis tool, mental model to lock in. Pricing V or O8 decides how much the value. Account determination, VKOA, decides where, the bucket. Both must agree. The pricing procedure hands over the account key, and VKOA catches it. Final perspective. This section is where SD proves it is financially trustworthy. Correct revenue, clean P&L, correct receivables, clean balance sheet, correct cash posting, operational trust. Junior consultants say, greater than it's an FI issue, ask the finance team. Senior consultants say, greater than let me check the determination analysis and VKOA mapping. That difference defines your career ceiling. Say next when ready.